Welcome to the Power Options webinar for the Optimized Long Option Finder tool. This is a very powerful tool that is essential for any long call or long put options investor. This unique tool is only available on Power Options. It can be accessed through the Long Call or Long Put Strategy tab in the Power Options suite of tools. The Optimized Long Option Finder helps investors select the best potential strike price to purchase based on the stock they are researching, their expected target price and the date that they expect the stock to hit that target price, and their desired investment amount. To access this tool, start by directing your browser to www.poweropt.com. If you do not have a subscription or trial membership, simply enter in your first and last name and email address into the fields and click the Start My Trial button. If you already have a current trial or subscription account, simply click Client Login from the main home page and then enter in the user ID and password for your account. Once you click the Log On button, you will of course be taken to the main home menu. From this menu, we would want to select the Strategy tab that applies to the tool. Here, we will select either the Long Call or the Long Put Strategy tab. If you do not have either the Long Call or Long Put Strategy tab available in your selected strategies, simply click the Other Strategies tab, remove a strategy that you are not interested in researching at this time, select the strategy that you are interested in researching from the available strategies on the left-hand side, and then click the Add to Menu button. Once our strategy appears, we'll click the Save button, and our strategy will appear with the other strategies in the main tab menu. To begin, let's click on the Long Call tab so we can access the available tools for the Long Call strategy. In the sub-menu, we see that we can select the option chain. We can go into the patented Smart Search Excel tool for long call screening. We can view pre-themed sample searches for long call trades. But in this webinar, we wish to focus on the Long Option Finder. We can access this tool by clicking the sub-menu link or by clicking the link that's available in the Long Call Tools section in the lower part of the Long Call menu. Once we enter the Optimized Long Option Finder tool, we will be prompted to enter in our stock symbol. Then we can enter in our expected target price of the stock, the investment amount that we would wish to put in to purchase options on our stock, and our target date that we expect the stock to hit our target price. For this example, let's say that we are interested in purchasing call options on Microsoft. So we would enter in the stock symbol, our expected target price and investment amount, and our target date. If you do not wish to enter in any information into these fields, as they are optional, you can click the Submit button at this time. However, in order to properly evaluate which options might yield the best potential return, the Optimized Long Option Finder will need to put in some default values into those optional fields. The Optimized Long Option Finder will assume a 10% increase in the stock price and a desired investment amount of $5,000 and a target date that is the next expiration date out in time. However, the purpose of this tool is to help you select which options might be the best for you to purchase based on your target price of where you think the stock is going to go after you've evaluated the position using the fundamental and technical criteria that are available. These default fields are in no way any projection, recommendation, or suggestion by Power Options of where a stock might go, what price it might hit on a selected target date, or how much money you should invest in options. Let's say that we see that Microsoft is currently trading at $33.70. And we're expecting a smaller increase in the stock in the next 15 to 20 days. So, we'll remove the default value that was filled in, and we'll enter in our values. So if we assumed a $2 increase in the stock, we would put in an estimated price of $35.70. For this example, let's say that we are only going to invest $2,500 of our portfolio into options on Microsoft. And let's say we expected Microsoft to reach $35.70 on December 25th, 2007. Once we have entered in our values, our expected target price, our target date, and our investment amount, we will click the Submit button. The Optimized Long Option Finder tool will then quickly go through all options for Microsoft, evaluate the current price of those options, and then calculate what those options would theoretically be worth if Microsoft hit our target price on our expected date. Here, we see that the call symbol MSQAZ, which is the January 2008 32.5 strike for Microsoft, is the first result that appears in our list. This option has 52 days remaining to expiration, a current implied volatility of 0.29 or 29%, and the current asking price for this option is $2.25. Based on our initial investment amount of $2,500, this means that we could purchase 11 contracts of this 32.5 strike option. We have an estimated commission of around $11, which would give us a total position cost of $2,486. If Microsoft was trading at $35.70 on December 25th, the estimated price of our January 2008 32.5 strike call would be $3.37. Our total estimated position value would be $3,696, which would yield a potential 49% return. These estimated prices and the estimated value of our position are calculated using the Black-Scholes pricing model for options. The order of these options are arranged from highest potential return to lowest. If Microsoft did hit $35.70 on December 25th, the Optimized Long Option Finder tool is telling us that the best potential strike price to purchase would be the January 32.5 strike call, as it would potentially yield the highest return. Now, you can see that there are different expiration months that appear in the Optimized Long Option Finder tool. We have a few different strikes for the January 2008 expiration, April expiration, and July expiration, and different strikes for those given months. You might ask yourself, well, why have none of the December options appeared in the screen? Well, we selected a target date of December 25th, 2007. This target date is after the December expiration date. If we wanted to evaluate what the options might be worth on a date earlier in time, so that we could see what December options might appear, we would just simply enter in a date that is prior to that expiration time frame. So we'll change our expected date from December 25th to December 15th. And let's say, based on our analysis, that we feel that Microsoft might hit $34.85 on December 15th. Once we've changed our values, we'll simply click the Submit button. The Optimized Long Option Finder tool will go through all of the available options for Microsoft and instantly return our results. Here, we see that the December 32.5 strike call is now the option that would theoretically give us the highest potential return if the stock was trading at $34.85 on December 15th. The December 32.5 strike call is only 24 days remaining to expiration, also has a current implied volatility of 0.29 or 29%. The current ask price is $1.77. This means that we could potentially purchase 14 contracts based on our investment amount of $2,500. Again, we have an estimated commission of $14, and the total cost on this position would be $2,492. Based on the Black-Scholes theoretical pricing model, our December 32.5 strike call would be worth $2.38 on December 15th if Microsoft was trading at $34.85. This would make our estimated position value $3,318, which is a 33% return off of our initial cost of $2,492. If you expected an increase in volatility due to your expected target price of the stock, the expected increase of the stock, you could simply recalculate by changing the volatility number in the field below. For this example, let's say we assumed that the increase in the stock from $33.70 to $34.85 would also cause an increase in volatility of 2%. So we'd simply enter in our value of 0.31 or 31% and click the Submit button, and then the Optimized Long Option Finder tool will reevaluate the potential options based on our increase in volatility. Here, we see that the July 2008 50 strike call, which is a deep out-of-the-money call, is the option that would potentially yield the highest return if Microsoft was trading at $34.85 on December 15th, but had a volatility of 31%. The current price of this out-of-the-money option, the July 2008 50 strike call, is 8 cents. Based on our investment amount of $2,500, this means we could purchase 277 contracts, giving us an estimated commission of $277. The total cost of this position would be $2,493. With the increase in volatility, and if the stock hit our target price on December 15th, the theoretical price of the July 2008 50 strike call would be 31 cents. The position value would theoretically be $8,310, giving us a potential theoretical return of 233%. Now, you might ask, how can we see puts, potential long put options that would match our criteria if we expected the stock to decrease in value? Well, we could simply go back into the Long Put tab and then select the Long Option Finder for the puts, but we're already in the Long Option Finder tool. Naturally, if we expected an increase in the stock price from its current value, none of the put positions would be profitable, as puts are a bearish instrument. So let's say we are expecting a decrease in Microsoft by December 15th, 2007. Let's say we expect Microsoft to drop $2 in value. So we'll simply enter in our expected target price of $31.70. We're going to keep the same initial investment amount of $2,500 and our expected target date of December 15th. We'll click the Submit button. The Optimized Long Option Finder tool will now look at all potential puts, the current price of those options, and where they would theoretically be worth if the stock was trading at $31.70 on December 15th. Here, we see that the December 32.5 put is at the top of our list, as it would yield the highest potential return if the stock hit our target price. In this scenario, the current price of the December 32.5 put is 47 cents. We could purchase 52 contracts based on our initial investment amount of $2,500. An estimated commission of $52 for a total position cost of $2,496. If Microsoft dropped to $31.70 on December 15th, the theoretical value of that option, our December 32.5 strike put, would be $1. This would give us an estimated position value of $5,148 for a potential theoretical return of 106% from our original position cost. This tool will greatly help any long call or long put investor greatly reduce their research and analysis time for helping them decide which strike price might yield the best potential return based on that investor's expected target price of the stock, the expected target date that they expect the stock to be trading at that value, and their initial investment amount. If you have any questions at any time regarding the Optimized Long Option Finder tool, or the long call, or the long put strategy, you can contact us at 877-992-7971, or you can simply click the email link down at the bottom of every page to send us an email, and our support staff will answer you as quickly as possible. Thank you for attending the webinar on the Optimized Long Option Finder, and we hope to see you again for our many other webinars on the Power Options tools and the various option strategies.